Good morning, everyone. This is Brian Edner with your Wednesday, October 31st market commentary. Once again, as always, we'll start in corn. It's been seeing a slow drift lower, feeling a little bit of pressure from outside markets. But open interest is showing a small increase, which suggests this is continued light harvest pressure, but not active fund selling. So the volume has been down recently, and that just suggests a light drift lower. This may cause March corn, with things slowing down in general in the markets, to carve out a little bit of a range. And right now, on that March chart, we're looking for that range to potentially be between 372.25 and 390.5. That's some of the recent lows and recent highs we've seen. And again, if this market does slow down, those could hold this corn inside that range. Right now, early thoughts for next week's USDA report as for a slight yield decline. Nobody's really put out solid numbers, but if you're going to poll most analysts, their first thought for next week's report will be another very slight yield decline for that report. Today we get another ethanol report. We did see ethanol demand bounce back a little bit last week. We need to see a little bit more. A number that we'd like to see this ethanol report reach to meet the USDA expectations would be around 1065 today. Moving over in beans, quite the difference there. Open interest is dropping rapidly and aggressively. This is, however, a sign of harvest pressure and not fund selling. Funds are still short about 44,000 contracts. So if this was active and aggressive fund selling, we would see open interest increasing rather than decreasing. So what we're actually seeing is a large number of traders in the beans leaving the bean market entirely. As we move from the November to the January contract, instead of rolling, it appears as though most are just choosing to leave that market. Bean harvest did hit 70% yesterday, actually 72%, so we've passed the 70% level, so we should see less of an impact on U.S. weather on the bean market. Maybe see a little bit of that attention switch over to South America. Right now, the general outlook for South America is that most things are doing, well, quite frankly, just fine. Bean planting is a little bit ahead of expected pace, and there aren't any large-scale concerns to really speak of for either Brazil or Argentina right now. On the charts for beans, there's no real sign of immediate chart support. So I guess the only number to really talk about is the contract lows for the January contract at 826.25. Moving over to wheat, we do have a little bit of news there. We did see that we sold 60,000 tons of wheat to Egypt here last week. That was the first sale in over a year. Immediately after that happened, Russian wheat offers undercut the U.S. price. So again, we have moved back to U.S. not being the cheapest wheat for sale to Egypt. So that helped to take away some of the excitement that we saw late last week and early this week. Also, in combination with that, the U.S. dollar moved to new highs for the year last night. So looking for any more wheat sales in a tough competitive market, our dollar moving to new highs, that takes away some of the excitement that we might see a bounce in the wheat exports as well. Last week we did see wheat sales at 449, which is a level we could consider as just okay. Again, we need to see a 600,000 or more sale on this weekly report tomorrow. And again, that's where the dollar comes into play. With the dollar bouncing, it might be pretty tough to expect a 600,000 ton sale tomorrow. And that's our main cause for the wheat drifting back down. Moving over to cattle, we did see an average cash trade last week of 114.56, breaking that long-term streak of 111 trades. Definitely positive news, yet we've seen the futures drift lower anyway. That is most likely tied to the stock market. We don't talk about the stock market influence on cattle on a daily basis, but right now the stock market has slid enough to catch traders' attention. And in fact, it made new lows for the move just on Wednesday. So we'll see what we get here, or last Wednesday, and it continues actually that slide into early this week. Now, yesterday it caught itself. This morning we see it slightly higher, so maybe the stock market influence will ease up a little bit today. So maybe that selling will hold off for today, and we'll turn focus back over to the cash bids, which yesterday were 113 in Nebraska. Initially, that would imply maybe just a fractionally lower cash trade. but nothing that would impact the markets on a large scale, especially with the selling that we already have going on here earlier this week. So we'll see what we get for updated cash bids here. That 113 was just on a Tuesday, so that could still come up and even result in a steady cash trade here this week. That's what we're looking at here for today. If you have any questions, give us a call at 800-551-4626 or visit us on the web at allendale-inc.com.